So I'm down at the beach now. I'm just about to go home to my office to do some update videos. I think this week might be the most exciting week I've experienced in the market for a very long time. And we're going to be looking at things like natural gas and oil and gold and the Forex pairs, the majors and the yen. We're going to be looking at all of that. So let's get straight back there, and I'll get this video up for you before the sort of market opens a little bit later on tonight. So I'm really excited about this week. It's going to be a fantastic week. There are all sorts of really interesting technical things going on in the charts and also in the economic news. So let's get to it as soon as I get back to my office, and I'll speak to you soon. Well, howdy folks. I'm going to cover all of the things I've put up in Twitter today and yesterday over this weekend. And I think this is a very exciting market period, and there are lots and lots of exciting trading opportunities. So I've put most of them up on Twitter. So I'm going to refer to Twitter or X, and then we're going to have a look at the charts when I refer to each one. So let's scroll down to the first tweet that I sent out sometime last night, I think about 2 o'clock in the morning. So the first one was about Apple. Now, we were short Apple, as you can see from this chart, that we took 50% profit at and around this red line. Let me just zoom in on that. You can see we had something like a 7% drop from the sort of high before the trend line break down to where we closed on Friday. And in fact, on Friday, we closed even slightly lower than this. I'm going to have a look at the Apple chart just now. I did have a couple of questions on this Apple trade that we took. First one was, did you play options or did you just short? And I just sold shares on Apple. And the other point or comment was, you shorted Apple? How big are your balls? So to use a word, it wasn't my choice, someone else wrote that, and I wrote this in return. Why do you need balls to short a ridiculously overbought stock with flat earnings, poor iPhone sales numbers, and a clean break of an overly perfect trend line and the 20-period moving average? And that's exactly what happened over here. You can see this trend line. We'll have a look at it more closely on the charts. This is a perfect trend line going back months and months and months, most of this year. And we have not broken beneath this trend line or beneath the 20-period moving average until now. And then we got the sudden and massive collapse after the earnings, and then which carried on until Friday. And that's the price that we got in at where that red arrow is, at around about $193.95, somewhere around there. So let's have a look at the Apple chart whilst we're on that tweet and zoom in a little bit onto that. You can see there's that long-term trend line, this massive rally up into new all-time highs. This rally is absolutely perfect, but it's almost vertical. And we only ever got pullbacks to the 20-period moving average and the trend line. And at some stage, we were due to get back down to the 50-period moving average and perhaps the 100 and even the 200-period moving average, which is this purple line, coming up at around about $160 as we speak. That will rise quite rapidly, of course, as it gets dragged up by the current price action. So that's where we are on Apple. And it's kind of not quite at support yet. We've broken down through this previous all-time high, only by a fraction, but we've got a bit of support beneath us, around about $178, $179, and then potentially $176, where we'll meet the 100-period moving average. We're still 50% short on Apple, looking for a move down to about 176, and then probably we'll get a bit of a bounce. We need to look at this in context over the overall stock market, including NASDAQ and S&P, which we'll have a look at a little bit later, and which I've also covered in some of these tweets. Let's go back to X. The other tweet that I put out was on Bitcoin shortly after that, and have a look at this Bitcoin chart. Once again, we'll have a look at this tweet chart, and then we'll go and have a look at the real charts as they are. And they're currently live at the moment, of course, as they're live 24/7. You can see we made this high over here, this sort of breakthrough, a false break through that resistance level, followed by a big collapse, a bearish engulfing candle, and then this gradual trickle down and eventual break through that support level. And then we've just been bouncing around since then, but looking weaker and weaker all the time. We're now beneath the 20-period and the 50-period moving average, but still holding above this grey trend line. I expect that trend line will be too tempting to break. Let's have a look at the charts. So here we are on the live charts. You can see actually over the weekend, we barely moved a fraction. Look at those two tiny full stop days. Now these full stop days sort of indicate that the market is undecided. There's no real momentum going either way. But if you want to try and interpret them in terms of the overall picture, then we need to look at things like the preceding largest moves, and that was a big bearish engulfing candle. And we're also below the 20-period and the 50-period moving averages, and this red support line, which is now resistance, as I showed you before. I expect we'll have to test this grey trend line at some stage, which is roughly at the low of this previous spike low candle. That's at about 28,500. But I think we need to aim for the 200-period moving average and possibly this lowest at around about 25,000. So that's my expectation on Bitcoin. We've got a trend line even further below us, a longer term trend line, and that's currently at around about 22.5 to 23,000. That's all the way down here. And I need to go into the weekly chart to show you where that trend line comes from. So let's do that. You can see it's this trend line here on the weekly chart, just cutting off those wick lows with that spike. And if we move down from where we are currently in this weekly picture, that would take us to just below 22,000. And I think there's every possibility we could get to that trend line and possibly even break down through there to these lows. And that's at around about 15,500. So don't discount that. That's a major support swing low. And if I draw a line across there, I'll just drag this one down. You can see that coincides with the bodies of this move up in December 2017. So that sort of area there and where the swing low is naturally a good target for Bitcoin. But first we've got to get through this short-term trend line. We'll have a look at that on the day chart. And we've got to get through this longer-term trend line. And then we've got to get down to those swing lows. I think there's every possibility that Bitcoin could do that. If you look at it on a weekly chart, not much of a pullback really. It's just down to recent swing lows in a pretty bullish overall uptrend. And I think if we do get down to 21,000, 23,000, possibly even 15,000, that could form a decent area for a support and a new base, potentially even a double bottom for Bitcoin to rally off and then test the undersides of these trend lines on the way up. We'll get a lot of bouncing back and forth as that occurs. So if we zoom into the day chart again, those are the two trend lines we've got to get through. First of all, this one at around about where we are at the moment, and then through the 200 period moving average in the longer term trend line at around about 21,600 at the moment, and then this major support swing low down at about 15,500. So that's Bitcoin. I think we're going to see that sort of thing play out. My first target for Bitcoin is around about 25,000. Let's go back to the tweets. So the next tweet that I put out was on the dollar yen and the pound yen, euro yen, Swiss yen, CAD yen, Aussie yen. And my only comment on these were they're all heavy. Now we're short across the board on all of these. And I think we're going to see further dollar weakness, as you'll see when we look at the DXY chart shortly. And I think that dollar weakness is going to flow more into yen strength than it does into euro and pound and all the other currencies strength. And that we're going to see the Japanese yen strengthen against not only the dollar, but also the pound, the euro, the Swiss franc, Canadian dollar, and Australian dollar. Let's have a look at the charts for those. So here are the same charts. Now I've got the 4-hour chart set up here. So just ignore the indicators for now. I use those for a different purpose. And what we can see is that all of these charts have either reached or broken major support. The dollar yen has broken down through this last swing low. There was a test of that low there at around about 142. Another test and a bounce. And in the last 4-hour candles on Friday, we broke down through that level and closed on a pretty bearish note beneath the 200 period moving average. That's the center Bollinger Band moving average that we've got drawn on the chart. I think we're going to see the dollar yen moving down to test further levels below us. And I think we're going to first of all have to get to this trend line, this green trend line, around about 139. And then the swing low, that's the lower Bollinger Band 2, around about 137. And ultimately, I think we're going to see the dollar yen moving a lot lower as more strength flows out of the dollar and into the potentially, and I say potentially because there's divergent opinion on this, but potentially the undervalued Japanese yen. And I think we could see this chart falling down to this trend line at around 136. Ultimately, my target is below 130 at around 128, down to these recent swing lows from, actually, it was just the beginning of this year in January 2023. So that's my overall target for dollar yen. In fact, we could even go lower than that. And in the last month or two, we're forming another consolidation above this green support level. So we're long at around about $21.50, looking for uranium to move up to $30. I think within the next 12 to 18, maybe 24 months, we'll be looking at $60 and then maybe $90 and so on. And I think uranium looks like a really good prospect. It's going to take some time, and it's not an immediate one-way movement, of course, because that's the nature of the energy market for a start. But also charts don't move up and down. Markets don't move up and down in a straight line. So we're going to see opportunities for buying, exiting, a pullback, rebuying, and so on as the market slowly begins to work its way up. And I think we'll see an acceleration in this trend. And if I zoom out, you can see uranium has some potential for some very large moves. And it doesn't have to be stuck in this very tiny little range that we see it in at the moment for such a long time. So I think we could be moving up to somewhere around about $30 in the next few months. And then beyond that, somewhere up to about $50 or $60. So that's one of my favorites, uranium. We're long there, and I'm willing to add to those long positions anywhere as long as we're above about $17 on this chart. Right, back to Twitter. So there you go. That's the long-term chart on uranium. That's the sort of thing I'll show you on the daily chart. This is where we are at the moment. I'm looking for a slower, gradual move up to about, I don't know, around about $30. A pullback. This won't be a straight line, and possibly a sort of a cup and handle type pullback. So another U forming around between $30 and maybe $25 to $28, and then a move up, an acceleration higher, and we'll get some bigger moves. Right, dollar index. This is one of my favorite charts that I put up 17 hours ago, and this is how it looks. I'm going to show you on the chart on my screen, but what I've said here is the dollar index, DXY, US dollar. This level that we reached is the 78 and 61.8% Fibonacci retracement level. It's a confluence of two of those Fibonacci levels from two different moves, the bigger move down and the shorter move down, and it's also a big weekly wick reversal in a new downtrend which failed the 200 SMA. Let's zoom in and have a look at this chart, and I'll point out a couple of things. First of all, this recent breakthrough support, very, very important on the dollar index. There was a major support there going back a long time. At around about 100.8, we broke through there with a big, massive candle down. We've broken back above it. Now, most people would think you would sort of retrace to the underside of that and then continue moving lower, but it doesn't always work like that. We actually retrace to the downward trend line. If I draw a fib from this top move down to the bottom, and then from this move down to the bottom, we've retraced 61.8% and 78.6% respectively, depending on which move we've measured. It's also where this downward trend line is, a long-term trend line. This is a weekly chart, and it's also where the 20-period moving average is. We broke through it, spiked up through it, that's this green line, and didn't close above it. And have a look at the shape of this weekly chart. Now, a couple of things could happen here on dollar index, and it's going to affect currencies, and it's also going to affect commodities and the stock markets. So this is a really, really crucial and important chart. Best case scenario is that we follow this red line and move up to that trend line. Now, today that trend line's at about 102.30. And the closing price was at about 102. So that's about 30 pips higher. So we might see that affecting the other currencies initially in the same way, with a move lower by about 0.3% on the euro and the pound and the yen, etc., against the dollar, and then a continuation of the downward trend of the dollar and an upward trend of the other currencies. Or we could see a double top at this level where we form the spike high, and that's at around about 102.75. So that could be a 0.75% rally in the dollar and a 0.75% drop in the other currencies, and we could form a double top at this Fibonacci confluence and then move lower from there and continue this move down. So there's two sort of scenarios, but we do want to hold beneath where that red arrow is, and we don't want to break above that level. So we'll be watching that extremely carefully. But notice we've got a lower low with this move below major support, but we've got lower highs on the weekly chart, consistently lower highs. And this week again was a lower high, not compared to the previous 2 weeks or the previous 3 weeks, but compared to where these candles are touching the trend line. So we look at that touch there, that one there, that one there, that one there. This touch has followed the trend line downwards, and overall in the bigger picture, if I put this on a monthly chart, it would be a lower monthly low. So that's what I think the dollar is going to do. Dollar weakness overall, that means strength in the euro, strength in the pound, strength across the board in the other currencies, including the yen. And dollar weakness potentially also means strength in some of the commodities, including metals like gold. And there will also be an influence on natural gas and Brent crude oil. So we'll have a look at some of those as well. So with the dollar index in mind, I had a look at the euro and the pound. This one I did 17 hours ago as well. And let's have a look at this tweet. The euro against the US dollar and the pound euro against the US dollar. If the DXY, the dollar index, behaves well as per our twinned ZEET, that's the last chart we looked at, we should reach 1.16 on the euro and 1.33 on the pound. This is a weekly chart on the euro. You can see we've had a big rally. We broke up through this resistance level, and that was crucial. That was at the same time that the dollar index broke down through support. And we've just pulled back down into these support levels, these Fibonacci levels and so on, and we're there at around about 1.1 on the euro against the US dollar. Now, if the US dollar strengthens a bit first before moving down, then we should see the euro pulling back down to about 1.0920 maybe, somewhere around there, and then a move up. My ultimate target for the euro is at 1.16. Let's see if we can have a look at that on the charts. So this is where we are in the euro, and this is the day chart. You can see that we've pulled back to these two moving averages. So that's the 50 period and the 100 period moving average on the day chart, and the 61.8% retracement of that move that broke out through that previous resistance is just below us at around about 1.1088. We're still holding above there, and the day candle on Friday was a very bullish candle after forming this tiny reversal candle below us, just above those moving averages. You can see there's the breakout level through those resistance levels. There's a big triple top here, which formed a very, very important resistance level. Whenever you see a triple top, it's a very key level. And we broke out through there, and this is the overall plan. You can see that the euro overall has been in a downtrend for a very long time. And we're just sort of pulling up and just retracing back up to that downtrend, which will meet this pink resistance zone at around about the same time and the same price, and that's where we're aiming for on the euro. So we're now at 1.1. We need to get up through that 20-period moving average, continue moving higher, and then get up into this level at around about 1.16, just below this trend line, and into the top of the sort of pink resistance level. So that's the overall plan and target for the euro, and the pound will probably follow suit. We're starting to form now a higher high and a higher low uptrend, and as long as we're holding above the 200-period moving average, which is down below us at the 78.6% Fibonacci level at 1.0782, we should be okay. Allow for a move down to 1.0782. I don't think that's going to happen because we looked at the dollar index and that seems to indicate that that's moving a little bit higher and then lower, and I think we could see the euro against the dollar moving a little bit lower and then higher and begin to move up. We'll see the same thing on the pound. I've actually got the line drawn in on here that I had on Twitter. So there we go. That's the day chart on the pound. I'm allowing for a move back down to this trend line, back down to about 1.27. At the moment, we're at 1.2750. We could even get back down to as low as this previous low, which would coincide with a double top on the dollar index. That's at about 1.2628, and maybe even as low as 1.2592, which is this previous swing low. But so far that looks pretty good. We're holding above the trend line. Big spike low on Thursday, bullish continuation on Friday. I think we might get a pullback to the trend line at about 1.27, and then the move higher. The pound's also got a downward trend line that we're sort of aiming towards, and that's now at about 1.33. As you can see, overall, most of the currencies have been in a long-term downtrend against the US dollar. So I think even though it's a downtrend, we've got to retrace to that trend line. Some stage, however, the dollar may get to a point where the dollar starts to weaken continuously, and that this currency, the pound, like the euro, begins to break this downward sloping trend line. It's a very long-term trend line, and move up to these previous swing highs. It's very possible that the pound could actually get up to as high as 1.43 in sometime this year, next year, something along those lines. And at the same time, the euro would move higher as well, and we might break the downward trend on the euro and get through that resistance level and get up into some of these highs here, perhaps at about 1.22, maybe even at about 1.25. So don't discount the possibility of the euro and the pound and other currencies breaking these long-term downtrends against the dollar and moving up to test some of the previous swing highs, going back into, well, 2020 and 2018, somewhere around there. It's not that long ago that we're at those sort of levels, and this downtrend line, like all trend lines, is not going to last forever. Right, back to Twitter, X, and let's have a look at the next one. It's just a little article on gold here that I put from Zero Hedge. You can read that. There's an article on my tweet talking about the decline of the fiat currencies and the adoption of gold as a standard to back currencies. But that's not just going to affect the dollar. It's just a general comment on gold, I think, overall, compared to the US dollar and other currencies. Then we get to stocks. Now, S&P 500, this is fascinating, but basically on NASDAQ and S&P, we formed these sorts of reversal patterns last week. And last week on S&P was a bearish engulfing candle with a tweezer top coming down to this trend line. I'm going to show you on the charts. This is the path I think that we'll follow in S&P. I think we've got some more downwards movement to go, something along this squiggly path. If you want to download this chart, you can do that on Twitter as well. There's an option to click on it, or you could just take a screenshot of it and have a look at the levels that I've got on. So I think we could get down to this first sort of support level at around about 4,300, bounce off there, eventually break down through there to this next support level at around about 41 to 4,200, where this rising trend line underneath us is, and then some of these moving averages, and then begin to move up from there. Let's have a look at some of these on the charts. I've got the day chart for S&P here, and that's just what I've shown you on the Twitter post, and it kind of looks like this. So I think I showed you a weekly chart there, but this is what it looks like on the day chart. I think we're eventually going to get back to these sort of all-time highs and potentially move higher on S&P. That's not what I think should happen, but I think it's possible that that could happen. But before that happens, I think we're going to move down to the support levels that I pointed out. You can see what happened last week. We had a gap down and then consecutively bearish candles. And this last candle on Friday, trying to get up through the 20-period moving average, failing to get through there, and then collapsing back down to this trend line. This trend line's drawn going back quite a long way, and I'll try and zoom out to show you. But you can see it's sort of drawn from that high there prior to COVID, another high there, support level on several occasions here, and then support and resistance through there. And then also more recently, resistance over here, and we've come back down to that. We've actually just poked through it. It's not a very precise trend line, so we're at and about that trend line. The fact that we've just gone through it doesn't really matter, but we're at that trend line right now. I think we could get a bit of a bounce. We've got this little gap above us here, which might need to be filled. And that's at about 45.60, call it 45.50 to 45.60 or 70. It's possible we could get up there, or we might just get to the underside of the gap. Sometimes a gap like this, in this case, acts as a resistance level, and although it's a price magnet, the price can't actually get into it and through it. So if we stop at the beginning of this gap, and it has actually been partially filled by a wick, but not by a candle body, that would take us up to about 45.50 or 45.60, and that would be the top of this wick high candle that we saw on Friday. So allow for a move back up. That's why I've drawn this green line slightly higher than rather a direct movement down. So allow for a move back up to about 45.40, 45.50, 45.60, and then eventually a new low, a new daily low, a breakthrough here, down through these moving averages. We're already below the 20, we've got the 50 just below that, and then the 100 at the bottom of this pink zone. So I think we could get down to about 43.20, somewhere into this pink zone, 4300, 43.20. There's a natural support level there at 43.30, so that's a good area to aim for. And then a bounce off there, perhaps back up to the underside of these support areas, even maybe as high as 44.40, back again, and then a move down eventually through there to this upward trend line. And then this pink zone, which is a clear supply and demand sort of zone formed over months and months going back into the past. If I zoom out, you can see why that pink zone there is really important too. Often it was support, often it was resistance, and so we'll see how we do when we get there. But it's also this rising long-term trend line, which I've drawn from the COVID low up through these recent lows. It's a bit of a messy trend line, and it's only got 3 touches. So I think a 4th touch would be a great thing to happen. 3 touches is not quite enough. I think we need 4 or 5 touches on a trend line to make it a proper trend line. And the market often likes to authenticate trend lines by 4 or 5 touches before eventually then breaking those trend lines. After having convinced everyone that that trend line is authentic, everyone starts to depend on it, and that's when it often breaks. So I think we need our 4th touch now, and that would take us down to about 4200, somewhere into this pink zone. I think that's what's going to happen, and then a significant rally towards the end of the year could take us up to the previous all-time high, and that's at around about 4800, 48.20, and then perhaps even higher from there. And I think what happens when we get above the previous all-time high is that potentially we move up just a fraction higher, maybe another 2-5%, before a dramatic collapse back down again. And then we'd see something like this. So we could move this arrow slightly higher to make a new all-time high, and then we could put a new path in thereafter, which could be quite a dramatic collapse and take us all the way down back into new sort of recent lows, something like that. I don't know if this is going to play out. It's all very pretty to draw things on charts like this, but this is the sort of thing that I'd be looking for in S&P. So a move down now, that's sort of a 10% pullback, something like that. I don't know how far that is. That's from 46 to 42. That's 400. That's about a 10% pullback, and then a bounce back up again to form a new all-time high, and then a sudden dramatic crash down through there, down through all of those previous support levels to start to form a new bearish trend. I think overall, that's my idea on S&P. Now, I'm not going to look at individual stocks in this video because there just isn't time. But if we have a look at NASDAQ, I think we're going to see the same sort of thing at the moment. We're just sort of moving lower, not quite as convincingly as the S&P. We've got a few support levels beneath us. We've got the 50-period moving average, and we've got this previous support double top, which is going to be a little bit tricky to get through. But I think we could see a little bit of a bounce along here for the moment, move up, perhaps back up to this area just below the gap at around 15,600, and then a move down through that moving average, down through these sort of consecutive supports here. That would be down through 1500, and then down through 14.7, 14.8. I think we could get as low as this sort of red support line down into about 13,800, something like that on NASDAQ. That will require a big sell-off on tech stocks, particularly the Magnificent Seven. And I don't know if we're seeing any signs of that happening just yet, are we? Oh, yes, we are. We're looking at Apple. Apple, sudden collapse. The biggest stock on the NASDAQ, and it just lost a large number of billions of dollars in this move, in this sort of collapse down during this last week. So perhaps Apple is the start of things to come. We've seen Microsoft coming off quite a lot. AMD being quite strong. The next one I think is going to fall is Nvidia, and we're just starting to see that weakness creeping into Nvidia, yet no big collapse. My overall target is the top of this gap, eventually the previous all-time high, which is the middle of the gap, bounce from that level. Let's see if we can draw a little path in here for you. So I think perhaps something like this on Nvidia. Let's move down to the top of the gap, bit of a bounce off there, down to the previous all-time high, move back up to the top of the gap, bounce back through there, down to the bottom of the gap, and then up after there. So that's my sort of idea for Nvidia. We'll have to see if that plays out, but that's my plan. And that would take us down to about $320. We're currently at $450. So that's my plan for Nvidia. It would be a healthy pullback. And in fact, we may even get down to somewhere close to the 200 period moving average. Right, let's go back to Twitter, see what's going on there. And I think the one that everyone's been waiting to see is natural gas. Where are we going on natural gas? Well, nowhere really. And I put on here, natural gas, steady as she goes. And a slightly perky green day on the hike in Ashi as drillers cut rigs for the 8th week in a row. That didn't give us much of a boost, but it kept us above support. We have a look at this chart on natural gas. You can see where we are. Sort of a double bottom here against this green sort of last chance line that I pointed out last week. The rising trend line and this horizontal support level. And I said this is the line that must hold for gas to move higher into the coming weeks. And in order to prevent a pullback down to some of these other support levels down at around $2.35 and $2.15, somewhere around there. But so far we've avoided that. So let's have a look at the charts and let's have a look at the normal candle charts on natural gas. I'm going to do a separate video for this sometime today perhaps, or maybe tomorrow morning. So keep your eye out for that. And if you haven't subscribed to this channel, please do so that you don't miss any of those. And while you're at it, give this video a thumbs up, please. So there's that reversal candle on Thursday, forming a double bottom against that support line. I like that very much. But we do have this downward trend line above us, just putting pressure on the price. And it's also where the 20 period moving averages. You can see that move on Friday moved up to just about touch that downward trend line and the 20 period moving average and this top pink resistance level. So that was too difficult to get through. But we had a higher high and a higher low. It's a hesitation candle. It's not a reversal candle. And we've got this double bottom potential formation with this bullish piercing pattern type candlestick set up on Thursday. So that looks pretty good. And we're holding above the 50 period moving average. So overall, I think it looks pretty constructive. There's no reason to panic. We want to see Friday actually reversing that. And on Friday we did. We got a higher low and a higher high, but we didn't manage to push up further through that downward trend line. It's not a significant trend line. If you look at it on a 4-hour chart or a 15 or a 1-hour chart, sure, it looks pretty significant. But when you zoom out and have a look on a day chart like this, it's just a very short-term trend line. They get made, formed, broken, reformed, all that sort of thing all the time. So it's not really an important indicator. But I would like to get above the 20 period moving average. But so far, I'm pretty happy with this. So that's natural gas. And the last thing, which I didn't put a tweet up on, actually I did, let's go and have a look at it. And that was gold, but that was some time back. In fact, going back to August the 4th, it's now August the 6th, so this is 2 days ago already. But I put up this chart on gold, and I'm not going to go to the live charts, there's no need for that. But you can see what we've got here is a sort of inverse head and shoulders pattern. And I'm overall bullish on gold. I've got a decent position on gold looking for a move higher. And we've got this move down, we've formed a left shoulder, we formed the head down here at the bottom at around about just below 1,900. We moved up, we formed a right shoulder and looking a little bit bullish, a little bit constructive. It looks like that's busy holding at the same level as the left shoulder. If this does play out, then during the month of August, by the time we get to the end of August, we could well be back above $2,000. So let's see if that works out. But if this pattern, if this shape holds, then somewhere towards the end of August is more or less the right time to move back up to about 2,000 to 2,060, 2,070. So that's my plan on gold. So far, so good. We're long from $1,919 on gold. And I think that's all I've got to show you for today. This is a long video, I understand that, but I'm going to try and put sections in so that you can search for the things that you're interested in. Again, if you haven't subscribed to this channel, please do so. And remember to give the video a thumbs up. Also, if you're not a member of this channel, there's a join button on this YouTube channel. You can click on that and join. It's $7 a month, and you get access to some of the behind the scenes YouTube content, which only members get to see. I think you'd find that pretty useful as well. Take care, have a great day, and I'll speak to you soon.